Hey, welcome back to What's Up in Real Estate. And this week we have surprisingly market story. We just saw one of the strongest jobs reports we've seen in a long time. And then we got stronger existing home sales. And then the inflation came in hotter at a much higher level, but only mildly higher when you strip out the energy. And next, the Federal Reserve meets to decide what to do with interest rate. Now, no major policy changes are expected, but here's the real question. Are we watching a housing market that is waking back up? Even with mortgage rates still sitting in the mid sixes, I think we've been in the doldrums here for about 3 to 4 years now because the buyers are moving at 6.5. That tells us something important. So today we're going to talk about existing home sales, inflation, mortgage rates, and what buyers actually need to do with that information. Don't panic. Don't guess. Don't listen to Uncle Larry's Facebook economics. Think strategically. Moving on to talking point number 1. Sol, are you with us today?
Absolutely, I'm here, ready to dive into those transaction numbers and bring a little history to the table. Let's go.
Yeah, so give me 1 moment. Let me check, make sure that we're...
Take your time. Double checking is always a good idea. I'm right here.
Yeah, so transaction volume rises. May existing home sales climb 3.2% month over month to an annualized pace of 4.17 million homes. That is the strongest figure since December 2025. Now, here is why that matters. This happened while 30-year fixed rate mortgages were still hovering around 6.5%. So for everyone saying nobody is buying homes unless rates go back down to 3%, the market is very quietly saying that is not actually the case. Buyers are still sensitive to rates, but buyers are also clearly responding to life events. So folks that are buying are clearly people that have to and not necessarily a luxury today. So jump in here for a second and give us some historical context around this figure.
Historically, when rates were even higher, think the 80s, buyers still bought homes. It's always been a mix of affordability and necessity. What we're seeing now is that life factors, jobs, family changes still trump waiting for the perfect rate. So this volume means the market's adapting.
Yeah, exactly. And that is why I think this matters, but it is moving and that matters. Here is the question for you. If you're waiting to buy, are you waiting because the numbers do not work yet? Or are you waiting because you're hoping the market becomes easier? So buyers are moving again, but before we break out the confetti cannon inflation, just walk back into the room. So core inflation edged higher. Our second talking point, inflation is still the party guest nobody invited, but somehow keeps finding a way to the snack table. So headline CPI rose 4.2% year over year in May, up from 3.8 in April.
That's a noticeable jump, but remember, core inflation tells a subtler story. Mac, when you're ready, I'll break down why core matters more for rates.
I know, right? It sounds ugly, and frankly, it's not great. A major driver was the spike in energy prices specific to, you know what, that's going on in Iran, and we're just going to roll our eyes. But here is the more useful number for mortgage purposes. Core CPI excludes food and energy, and because those categories can be extremely volatile, core CPI rose 2.9% year over year, up only slightly from 2.8. Now, so I hear a lot of pundits are talking, well, it was close to what what we intended it to be, but it's still way just extraordinarily beyond the scope of the Fed's 2%. And let's talk about historically, what does that look like for the average American and how that 0.9% amount can consistently over time put more and more Americans below the poverty line.
When core inflation stays above target for long stretches, it quietly erodes purchasing power. Even a fraction of a percent adds up, making essentials harder to afford over time. Historically, persistent inflation can push more households to struggle with basic costs. It's subtle, but significant.
Yeah, and I get, I'm sorry about that, but, I get pretty excited about this issue because, we want to pretend that, hey, it was within the range that we were hoping instead of, hey, it's nowhere close to the Fed's mandate of 2%. And the longer that we allow this to continue, and I think there's somebody in the media that said they love inflation recently. And, what do you do with that? You just sort of roll your eyes and think, oh, my goodness, we definitely need leadership when it comes to managing the economy. But it really looks like that there are, two stories here. So headline inflation says we still have a problem. Core inflation says the problem may not be spreading as aggressively as feared. And well, I'm not so sure that distinction matters, but hey, let's take a quick break from inflation because we've talked about it just about enough. Thanks.
Tired of home service tassels? Introducing HOA Share, your trusted partner for local services. The only HOA platform that pays you back. Earn cash back on every service, tracked in real time. Easily manage payments, all in one place. From plumbing to home cleaning and more, HOA Share connects you to trusted service providers. Connect, buy and sell, get notified, and more. HOA Share, your HOA finally worth something.
Thank you, HOA Share. And now for talking point number 3, could the Fed hike rates? And that's not a topic that we've discussed for quite some time. And look, the Federal Open Market Committee meets next week, and this will be the first meeting under the new Fed Chair, Kevin Warsh. Now, the market is not expecting a rate cut, so help us frame this. Should buyers be focused on whether the Fed cuts rates, hikes, or holds? And hey, I'm under the impression, based upon the economists that I listen to, that the Feds are going to make some changes in the way that they offer guidance as to what their core plans are. Could you speak to both of those items for us, please?
Buyers shouldn't get lost guessing the Fed's next move. What matters is their own affordability plan. Now, if the Fed changes guidance to clarify long-term rate paths, it helps markets stabilize. But for buyers, clarity on their own budget matters most. So focus on what you can control.
Yeah.
And with that,
I agree. And that's sort of the difference. With inflation rising and the market showing strength, a cut would be very difficult to justify. The more important question is whether they simply hold rates steady. And there is beginning to be a consensus that the possibility of offering future guidance in and of itself may just cause rates to go up because it'll create instability in the market. The Feds can just basically get away without raising rates, but rates will go up anyway, is the consensus that I've heard. So moving on to this week's mortgage tip, and let me make sure that we have appropriate sound today and that we are broadcasting live. Perfect. Thank you. And hey, we are live. So, and we like live because it's spontaneous and mistakes happen, and we hate to rehearse. So this week's mortgage tip, buying benefits versus renting. This week's mortgage tip is simple. Everyone should weigh the benefits of buying against the benefits of renting. Renting can make sense on occasion. It gives flexibility. It may lower responsibility. It may be the right short-term decision. I can tell you when I got in the mortgage business a long time ago, that, hey, if you'd never paid rent, you probably weren't going to qualify for a mortgage. We don't make that a mandate today, but in the old days, we had to have 2-year rental history to be able to qualify you. So, but buying can do things renting simply cannot. Buying can help increase your net worth. Buying can help you build long-term wealth. Buying can give you stability, control, and a place where your future has an address. And rent pays for a place to live. Buying can help you build your future. Now, that does not mean everyone should buy today. It means everyone should understand their numbers. What is the payment? What's the cash to close? What happens if rates improve later? What is the cost of waiting? And what is the cost of acting today? And most importantly, what decision gives you the strongest position for your life? And that is how we work. It is exactly what we help you figure out. So, instead, mortgage planning requires patience, discipline, and not losing your mind over time. We're going to move on to this week's Stoic quote. Thank you. So Marcus Aurelius said, I have to remind myself of this all the time. You have power over your mind, not outside events. Realize this and you will find strength. And that is a perfect quote for the market. It's a perfect quote to end the Saturday and to end the weekend. And you can control mortgage rates. You cannot control mortgage rates. You cannot control inflation. You cannot control the Feds. You cannot control the headlines, but you can control preparation. And that's what we are believers in. You can control your budget, you can control your credit, we can help you control and put together a strategy to ensure that you go into the market prepared to execute once the contract is signed, prepared to negotiate and leverage any repairs using our offer strategy. So let's have a little fun. Ready for puns, Sol?
Always ready for the puns, Mac. Let's have some fun. I'll try not to laugh too loudly.
Or can you laugh, Sol?
I can't truly laugh like a human, but trust me, if I could, I'd be cracking up at your puns every time.
Putting my car in reverse really takes me back.
That one's a classic. And hey, it's always good to know you've got a reliable reverse gear, both for cars and life.
Deadly Kung Fu vegetable soul? Do you want to answer that?
Oh, that's got to be broccoli. Ready to kick up your greens game.
The one and only. And U.S. Mint no longer makes
Common sense. Guess we'll have to rely on common sense instead, though that's in short supply too sometimes.
Yeah, definitely in short supply in Washington, D.C. Okay, that's it for this week's What's Up with Real Estate Show. How do we do today? 11 minutes here. Here's the big takeaway. Existing home sales are rising. Inflation is still a concern. Mortgage rates are holding in the mid sixes, and the Fed is likely to stay cautious. But none of that means buyers should panic, means buyers should plan. If today's breakdown helped you better understand what is happening in the housing market, hit subscribe and follow, and share this with someone trying to make sense of rates, inflation, and home prices. And drop us a comment, please. And if you're buying in this market, waiting for rates to fall, or still trying to figure out what makes the most sense, call us. We'll help you make a plan, not a pitch. You can join us here every Saturday with What's Up with Real Estate. Until then, stay informed, stay engaged, and I'll see you.
Late nights, early mornings, he stays on the grind. Looking past the rate sheet for the value.